If you've got any money invested in the stock market and been watching this recent activity, then you'll recognize this scene as stocks burn and the share prices tumble downwards. So that's it. There's nothing left to do but sell everything and get out of the market, right? And you've probably heard that with the share prices dropping like this, the opportunity is to buy stocks now because they're at a discount. Which in reality, that's a lot easier said than done. Which is why I wanted to share this trading opportunity that I always use in situations just like this one. While reviewing the stock charts, I found an ETF that looks promising for a short-term option play. The ProShares Short VIX Short-Term Futures, ticker symbol SVXY, is an ETF that provides inverse exposure to an index comprising the first and second month VIX future positions. Now, because this ETF is an inverse of the VIX, we can actually plot and anticipate share price because it follows closely behind the VIX Volatility Index. I can better describe this phenomenon by sharing the charts for the SVXY ETF and the VIX side by side. Notice that when the VIX index climbs up and reaches a peak, there's a corresponding valley or dip in the share price of the VXY. Now, we obviously expect this because the SVXY is the inverse of the VIX. Now, the share price reaction of the SVXY has a minute amount of latency as it follows the VIX, but since we're watching the daily charts, we can't really see the lag on the charts. Which is okay because for this strategy, we're focused on what happens after the peak. Let me zoom back in on the chart for SVXY. Notice that after each of the dips, the share price recovers and moves back to the moving average line, until the next spike in the VIX, which of course causes the SVXY to drop again, which is then followed back to a movement back to the moving average line. This pattern repeats over and over again. As the VIX moves up and down, so does the SVXY, but in an inverse fashion. Now let's go ahead and take a look at some daily charts going back to the beginning of this year, January of 2022. Now the chart up above, that's for the SVXY, and the chart down below, that's the daily chart for the VIX. And here we can see that same pattern recurring, where the VIX moves upwards, and then the SVXY reacts in an inverse fashion, and it starts moving downwards. So my plan was to take advantage of this situation once I saw these patterns start to emerge. So my plan is to buy a call option when the SVXY is low, and then ride it upwards as it starts to recover. Obviously, there's no guarantees. Now, I shared this stock pick over in my Simple Trading Room community, where all the option hackers got the trade notification right before I made this trade. If you want to become a member of my option trading community, be sure to visit me over at discord.simpleoptiontrading.com. Alright, now let's go take a look at the actual trade I made after the notification when the VIX was up and the SVX was low. Now, I actually purchased the SVXY call option on June 13th, which you can see here in the daily chart. And on that day, the index closed at $45.26 per share. So here's the actual transaction record from my account history, where you can see that I bought the call option for the SVXY with a strike price of $46.50. Now, I submitted this order on June 13th of 2022, and it was filled that morning at 9:16 a.m. Pacific time. Now, in order for me to buy this call option, I needed to pay $1.75 per share, so I paid a total of $175 in premium for this call option. Now, just 2 days later, on June 15th, what I had anticipated and was hoping would happen is that the VIX started to come down, which meant the call option for the SVXY that I purchased, its value was going to start going up. Let's take a look. So here again is that daily chart for the SVXY. And if we focus and concentrate on June 15th, we can see that the index had a high price of $46.42. Now, since the index was up almost 5% in just 2 days, I decided to take profits off the table. So here's the transaction record from my account history where I actually sold the call option for the SVXY. You can see I submitted it on June 15th, and it was filled that morning at 8:57 a.m. Pacific time. At the time that I sold this call option, I received $2.10 per share in premium, which meant I received a total premium payment of $210. So now let's do a little bit of quick math and calculate my profits. So on June 13th, I bought the call option for SVXY, and I paid $175 for that call option. And then on June 15th, I sold that same call option and I received $210. Now, to calculate my profit, we take the amount that I received, that $210, and we subtract the $175 that I originally paid for that call option, and we find the difference is $35. And so that's a total profit in my pocket of 20% for just a 2-day option trade. Okay, now sure, $35 of net profit isn't a lot, but a 20% return in 2 days? That's something to think about. So if one of my option hackers was following along with my trades and they scaled it up and traded using $1,000, well, now they have $1,200 in their pocket. Or if they started with $5,000, a 20% return would now give them a total account value of $6,000. So I'm inviting you to my Simple Trading Room community where you can become one of my option hackers and be one of the first to know about my stock picks and trade alerts so you can follow along with my profitable trades that are just like this one. You can join now by heading over to discord.simpleoptiontrading.com.